All right, so as Crow said, I talk a lot about like Bitcoin fundamentals, and I know that's what I was going to talk about today, but I feel like you guys have heard a lot about that over the last 2 days, a lot about big picture stuff, why Bitcoin is going to be worth a lot of money, why crypto space is different. You've heard a lot of that stuff. You guys are here, so I know you already believe in the stuff, right? I don't need to drive that point home. So rather than try to like hype you guys up some more, I thought I would give you something a little bit different and give you some actionable stuff that you guys can actually write down, take some notes, leave here, and put into practice right away. Does that sound better? Something actionable. That's what you guys came here for, right? He said, come to be or leave as an expert. So you got to learn something. So I don't want to fluff you guys up. I don't want to hype it up. We'll hype it up a little bit, and then we'll take some actionable stuff. All right. So I'm going to talk about how to capitalize on the greatest wealth transfer in history, which sounds pretty good, right? So we talk a lot about wealth transfers. We talk about how to, cryptocurrency, Bitcoin could be the greatest wealth transfer in history, but we want to capitalize on it, right? We don't want to just observe it. We don't want to just see it go by. Like, how do we take advantage of it? So that's what we're going to talk about. I'm going to tell you exactly how we're going to do that. All right, so the first thing I want to tell you is that I have bad news for you. Getting wealthy is really hard, all right? So you could work really hard, you could be really smart, like I said, work hard, and you could get rich, all right? You get really rich, but to get wealthy, it's really hard. And the thing is that it takes a lot of timing and luck. All right, to build massive wealth, it depends on your timing and luck because we have these market cycles. And you could look back through any market over any period of time and you see the market goes up and the market goes down. The market goes up and the market goes down. And if you happen to be retiring in one of those down cycles, or you hit your working age 25, 30 years old in a down cycle, it could be really difficult, right? You have a 10-year bear market and I'm 30 years old. Well, that's going to be really difficult for me to build wealth. I'm retiring and I'm 65, 70 years old and 2008 comes, well, guess what? My retirement's gone. So it takes timing and it takes luck. To get generational wealth, it's going to take more than just hard work, all right? So what we need is these wealth transfers. And wealth transfers happen during certain times. They happen, there's two main times that wealth transfers happen, when wealth transfers hands, when it changes hands. And it happens through times of serious recession, when one market crashes and another market happens. And it also happens with new technology cycles. And we're about to see both happen at the same time. It's going to be amazing. It's going to be the biggest wealth transfer we've ever seen in history, and it's going to create all new families and new wealth. Now, I'm going to go through a lot of information. I'm going to tell you, we're going to go through 3 key parts, and I want you guys to take notes if you want.
Ladies and gentlemen, I bring you Crow Trader. No longer do you have to be a power trader to make profits in the market. Crow Trader is easy to use, powerful, and customizable. An algorithmic cryptocurrency trading bot that sounds difficult, but makes automated trading a breeze. 6 powerful trading strategies, including Bollinger Bands, EMA Sniper, Ichimoku Cloud, Ping Pong, and others, with more to come. Complete back testing for every market pair so you can see the effectiveness of a strategy using historical price data. Customize your strategies to operate the way you want them to, and let Crow Trader trade the market while you're sleeping. Save and share your customized settings or load settings of other users from within the community. You are never alone. Tweak your settings until content for best earning potential, and then turn on paper trading to find out how effective your strategy is in real time without risking any capital in your experiments. Run Crow Trader on your favorite exchanges such as CoinBase Pro or Binance, with new exchanges coming soon. With Crow Trader, you are never alone as our growing community aims to help one another find success in the market. Once content, turn on live trading for your market pairs and let Crow Trader get to work improving your position using base pairs such as Bitcoin, US dollar, or Ethereum. Get Crow Trader now at crowtrader.com and start trading today.
You can take pictures of the slide. At the end, I'll give you a link where you can go download this whole slide deck because I'm actually going to give you specific stuff of different assets that you can buy, how you can buy them, etc. So you're going to want to download that. All right, so What am I talking about technology cycles? And I'm not talking about technology cycles. Really what I'm here to talk about is technological revolutions, which is a big difference, all right? So over the last 200, 250 years, there's only been 5 technological revolutions, and this is it. 1771, the Industrial Revolution. We took people out of the farms, out of the fields, and brought them into the factories. That was a massive shift in the way the whole world worked, all right? This wasn't an improvement, this was a change. We had the steam engines. All of a sudden, we could sail across the sea under a steam engine, railroads, et cetera. It changed the way that stuff moved around the world. We had electricity, heavy engineering. In the 1900s, we had automobiles. Imagine that before 1900, for all of humanity, you had to walk or ride a horse. And then all of a sudden that changed. I mean, that was a massive shift. 1971, information telecom, that was the invention of the microprocessor, the computer, the personal computer. These are massive technology revolutions. And if you notice, they happen about every 50 years. So from 1971, 50 years, that puts us where we are today. All right, these are technological revolutions. These are the chance that you have to make a lot of money. And so we can get rich in these technological revolutions. You have Cornelius Vanderbilt, he built the railroads. You know, he was worth about $160 million when he died. Andrew Carnegie, he created, the steel, $190 million. Henry Ford, obviously, automobiles, manufacturing, $180 million. And then we have Jeff Bezos, Amazon, $112 billion. Now, you've often heard that, $160 million, Cornelius Vanderbilt, $160 million, that was a lot of money back then, but in today's dollars, we always hear that, right? Adjusted for inflation, that's about $400 billion. And we'll get into why that matters, what today's dollars even mean, and why do we even say that, which obviously leads us to Bitcoin. But you can understand that each one of these technological revolutions ushered in a whole new set of people that made money. It's not that the rich just keep getting richer. When a wealth transfer happens, it transfers from one set of people to the next. So everybody here right now, we're in the middle of this wealth transfer where it's not going to be the same people that are always getting rich. It's going to leave the set of people that are holding on to the wealth now, and it's going to go to a new set of people. Now, not everybody here is going to be the next Andrew Carnegie, I hate to break it to you, but we can all get a little bit of that wealth transfer. If we put ourselves on the receiving end, we can receive that money when it comes to us. And I'm going to tell you how to do that today. The good news that I have for everybody here is that you're all lucky. I told you it's hard to get wealthy. It takes luck, but you're all lucky because you're born right now. You're all at the right age to take advantage of this opportunity right now, right? If you were 12, 14 years old, you'd be too young, unless you're this guy's kids. They're taking advantage of it. But if you're, 10, 12 years old, you're too young to take advantage of this. Or maybe you'd be too old. But all you guys are lucky. You were born at the right place. You're right here. You're right now. And you're all paying attention, right? A lot of people are missing this. And I know we've talked about before, and Crow talked about it, like a lot of people are going to miss this opportunity. And I had someone telling me recently that it's not fair because you guys have this chance to buy Bitcoin right now, but when it's $100,000, people miss that. It's not fair. Well, everybody has an equal chance, but you guys are the ones paying attention, so you're all lucky. And I believe that the biggest boom is still ahead, okay? So yeah, 2017 came, we saw Bitcoin go from $1,000 to $20,000, and that was great, but that's just the first little blip on the radar. The big move where the public comes in is still to be seen. So we're going to have one more big boom ahead. Right now we've only had the retail boom. We've had the true believers, the early adopters. So what happens, it was actually Mashinsky yesterday was talking about the chasm. And the chasm is where a product goes from early adopters, true believers, and then it makes the jump over the chasm to the early adopters and then eventually the late adopters. And so that's kind of where we're at right now. So we have this chance. You have one more chance. The question I have for you, though, is will you get this right? All right? Will you get this right? We have one more chance, and you don't want to blow it. Are you going to get it right? How are you going to navigate this? And I talked to a lot of people who saw massive wealth in their accounts in 2017 only to lose it all. And I talk to them all the time on my YouTube channel. My YouTube channel is Mark Moss, if you want to check it out. a little plug, but I answer all the comments on there, and I see these people, they say, I'm going to get it right next time. I'm going to take profits next time. I'm going to do it right. I'm going to take profits. And I say, great, how? How are you going to take profits? How do you know when? Of course, they have no answer for that. They don't know. So how are they going to do it? Well, I'm going to show you tonight. I'm going to show you how you're going to do that, okay? So we need to have a system. We need to know how to navigate it. We have to know how to do that. And I can tell you firsthand, which I'm going to show you, that hitting these big winners, that's not enough. Just getting lucky and hitting the next crypto, winning the lottery is not enough. You guys know the people that win the lottery end up broke. You know that these sports athletes that get $60 million contracts end up broke. That's not enough, okay? It takes more than that. So a little bit about me real quick. For the last 4 years, I've been writing a cryptocurrency research newsletter. I've been putting out every single month for the last 4 years a newsletter, market trends, the best coin to buy, all of that. I put out over 20 calls that went up 1,000%. And I've been a full-time investor for over 20 years. To see 1,000% was incredible. I'd never seen anything like that before. I had some calls over 25,000%. My best call I put out did over 100,000% return, which means $500 goes into $500,000. I mean, it was incredible. I'd never seen anything like that before, right? But I hate to tell you this, that most people didn't get rich. As a matter of fact, almost none of them got rich. And not only did they not get rich, most of them ended up broke. I put out over 20 calls that went up 1,000%, but people weren't getting rich. Why is that? It's because it takes a lot more than just getting the next big thing. So we're all here trying to find the next big thing, but that's not enough. All right? It takes more than the next big thing. Without a system, it's not going to matter. If you don't have a system that's going to help you to take those profits and keep those profits, hitting it, winning the lottery is not enough. All right? As I said, we're going to have one more chance, one more big opportunity that's in front of us, one more big bull market, and then we'll settle in. I believe, over the next, decade, couple generations, we're going to see it continue to go up. I'm not saying it's all going to be over. The market's going to go up for decades, right? Generations. But I'm talking about the big boom like we saw in 2017. I believe we're going to have one more chance. And so the question is, do you have a system, right? You need to have it. So my goal in this presentation, and I have a lot of slides to go over. I'm going to try and go through it pretty quickly. Looks like I'm doing okay. Like I said, I'm going to go through this pretty quickly. I got a bunch of slides. I'll show you where you can download this later. But my goal is for those of you that have already seen big profits, so maybe you were in the real estate boom in the mid-2000s, or you were in the crypto boom in 2016 and 17, so maybe you saw those big profits in your accounts, but you didn't take them. You saw the profits dwindle away. If that's you, you didn't keep them. Or if maybe you're new to this and you missed out on that boom, but you want to get in the boom, and this time you want to learn from other people's mistakes and you want to keep the profits. Either way, I want to show you how to set up a system, all right? I want to show you how to capitalize on this next big boom that we're going to have. Does that sound good? Anybody want to see that system? All right, so real quick about me. I've been a full-time investor for 20 years. I started in real estate back in 1995. I was investing in internet stocks in the mid-90s. I started an e-commerce business in 2001 after the dot-com crash, the worst time in the world. I'm a glutton for punishment, I guess. I built that up, had a Fortune 500 exit, developed over $25 million in real estate. I travel the world and I focus on alternative investments, so gold mines, silver, oil fields, renewable energy, crypto for over 4 years. I've been editing the top crypto newsletter for the last 4 years, thousands of subscribers, the calls I told you, I do the YouTube show, podcast. I received an award for teaching these same principles, and I don't really have to worry about myself anymore, luckily. I have my family, and now I like to help other people. We like to do serving opportunities, and I love to teach as much as I can. But it wasn't that long ago, it was a lot different for me. I had to start from scratch about a decade ago. I built up a $25 million portfolio, Fortune 500 exits on businesses, and in 2009, I got wiped out. And I wasn't just wiped out to zero, I was millions of dollars in debt, all right? So I've been there. I've had to do this twice now, and I learned a lot, right? I had all this stuff going my way. I just got married. I just had my first kid. Life was great, built our custom home, and now I'm broke. Now I'm in debt with millions of dollars. It was painful, and I was forced to start all over, seeing everything just disappear like that. And it was all because I didn't understand one concept. There was one thing that was missing, which is what I want to share with you guys, and I want to drive this home. I didn't understand the one concept, and this is really the key to success. It's the most important thing with all of investing, all right? I didn't have the financial education. I didn't have the foundation to be successful. I knew how to make a lot of money, but I didn't know how to keep the money. I didn't know one thing. So I started to buy these financial research newsletters. I was determined I had to figure this out. And I'm not talking about like buying like Money Magazine, Entrepreneur Magazine. I'm talking about spending thousands of dollars on financial research newsletters to figure out what is going on with this financial system. Why did it crash? Why did I lose my money? What are the core concepts of investing that I don't understand, right? Anything I could do to increase my knowledge. And I learned this one concept right here that changed everything for me, right here. That money is like energy. And what that means is that, yeah, money doesn't disappear. It transfers. That's what energy does. So what that means is that when I lost all my money in 2008, someone else got it. And I didn't like that. I didn't like that at all. I lost all my money and someone else got it. I don't have a slide for it, but at the end, at the height of the real estate market, I developed a $12 million building. It was a mixed-use building. We had offers at like 11 million, turned it down. In Southern California, which is where I'm from, in like less than 6 months, the real estate market dropped 60%. That building went back to the bank. The bank sold that building for $4 million. Today, that building's worth almost $20 million. So that's what I'm talking about when my money transferred to somebody else, okay? So money's like energy. That's the concept that changed everything for me. So over the next 5 years, I worked hard. I had to rebuild my life. I had to rebuild my money. I had to start from scratch. Like I said, I was digging myself out of a super deep hole. And most importantly, I knew it was my education that I had to transform. That's what I had to learn. And I was determined to learn from my mistakes, right? So, you know, they say, so I was determined to learn from my mistakes. And in 2015, I started buying Bitcoin. I started buying other cryptocurrencies. And like I said, I started writing the newsletter. My newsletter did really, really well. It was mania. I mean, in 2017, you could have almost bought anything, right? It was crazy. But the thing is, for me personally, it was a different time, right? I had the real estate boom that I got wrong. This time, because of the education, I spent 10 years building my education. When the crypto mania came, I was different. Now, I was battle hardened. Mike Tyson says everyone has a plan until they get punched in the face. Well, I'd been punched in the face a couple times, and now I had learned new systems. I had built a plan. And I used my painful lessons as a reminder. I had the system that I had learned and I'd built, and I just plugged crypto right into my system. And I was different now. I was battle hardened. And so my systems and habits helped me take those profits from crypto and put them into other assets. I took profits at the top of the market and bought more real estate, and I bought more gold. And it allowed me to do that without getting emotionally involved. And I tell you, it was really hard. When the market's going straight up like this, I wanted to put more money in. But you need to have systems and habits and discipline to keep you from getting emotionally involved. And again, if you guys miss that, or if you got it wrong, you're going to have one more chance. One more chance to get it right. So after years of learning, I had to figure this out the hard way. Lots and lots of work, but you get to cheat. So I'm going to show you guys a system. Does that sound better? Who wants the easy way? The easy way is better, right? So that's what we're talking about. All right, so I'm going to go over 3 secrets that I've learned. And these are going to be actionable, so this is the part that you want to start taking notes if you want to start writing this stuff down. All right, so the first secret we're going to go over is that one size does not fit all. So I get asked all the time, I have my YouTube channel, I have my podcast, people always ask me, Mark, what's the best investment? What do you recommend for this? And my answer is always the same. I don't know, it depends. Because there's no right answer for anybody here. We're all in a different set of circumstances. But regardless of where you are, how much money you have, where you live, what age you are, regardless of that, there's a perfect situation for you. You need to figure that out, and I'm going to show you the questions that you need to ask yourself to figure that out. So I'm going to show you those questions, okay? Secret number 2 is that what you do isn't important. It's not what you do, it's how you do it. I got the what right. I was investing into real estate at the hottest time of the market. What I was doing was right. How I did it was wrong. Maybe you were investing into the crypto market in 2017. What you were doing was right, but how you did it was wrong, and that's why you're not rich today. So I'm going to show you guys how you can implement a system really quick and get the how right. Does that sound good? Anybody want to see that? Come on, are you guys asleep out there? All right. And then finally, secret number 3, I'm going to show you that there's only 2 levers. There's only 2 things that you guys need to look for in the market. These are reported by the government, and you can watch them yourself, and you're going to know which assets are going to go up and which assets are going to go down. It's that simple. Okay, there's 4 different areas that you need to focus on making money, and that's it. It doesn't need to be complicated. I'm going to show you what those are, okay? So secret number 1, one size doesn't fit all. Let's see, all right, we're looking good. One size doesn't fit all. Now, when I was rebuilding, I told you, I had lost everything and now I was millions of dollars in debt. So I knew that I had to rebuild, and I knew that I had to do it right the next time. And so like I said, I started increasing my education. One of the things that was super painful is I had to look at my mistakes. Like, where did I go wrong? What was the things that I did wrong? And most people want to be like an ostrich with their head in the sand and not really think about that. But I knew that there was no way that I could learn unless I figured out what I did wrong and I could correct those things. And like I said, I was determined to never let that happen again. And I wanted to be like that money, the energy and money. And I wanted money to come to me next time. So I vowed to myself, to my wife, to my family, to be on the receiving end next time. And so I studied all these different strategies. Like I said, I started buying all different newsletters, and I started learning what these different assets are and how different assets work together, and they balance each other out. And I learned about risk management and all these different things. And in the beginning, like I said, I was in debt big time, and I wasn't really making any money, and so I didn't really have a lot of money. So even though I was learning all this stuff, and I thought that my education started picking back up, I didn't have enough money to start investing into all these different assets, and I didn't have enough money to worry about to like structure. I barely had any money, and so I had to be super risky, I thought. And let me just pile it all into the ones that I think can just give me the best return, and I'm just gonna like throw up that Hail Mary, and hopefully this works for me. Because I don't have a lot of money, and I need to do the best that I can, is what I thought, right? And one day, I was talking to one of my friends, and he's a coach, a personal coach, and I was kind of telling him like this transformation I've been through and like all these things that I've learned and how this is the way that you should be as an investor, and you should actually use non-correlated assets and put some here and put some here. And I'm explaining this all to him. And I was telling him that, one day I'm going to be that guy. One day I'm going to have all this figured out, and I'm going to know exactly how to do it. I'm going to do it. And he's just kind of like watching me, and like he just kind of like smiles at me. And he said that, someday means never. Someday never comes. He says, if you want to be that guy, that's the guy you want to be, you got to be that guy today. You can't be that guy later. Like, if you need to be really strong in the future, you just can't be strong when you need it. You got to start building the muscle way back here, so when you finally do need the muscle, you have it. So he said that I needed to start taking the actions and habits today so I could finally be that guy, right? And so I did. So I started setting up this system, and I said, okay, you're right. So what I did is, since I didn't have that much money, I still want to be risky, I put like most of my money into what I thought was the home run stuff. But I started to build the habits and discipline, and I started to put money into other areas and build those habits. And so over time, I could build those habits, I could build that discipline, and my muscles got stronger and stronger until my system just worked on autopilot. I took the emotion out of it. And what happened is, when the crypto mania came, my muscles and discipline were really strong at that point. So now it was automatic for me, right? And like I said, at the height of 2017, everything said the market was going to keep going higher. This is a brand new technology. We hadn't reached adoption. There was all these things. I'm not going to get into it. But everything from what I understand of investing, the market should have kept going up. There was a black swan event. I'm not going to get into all that of why the market crashed. But I was at a point where like, holy crap, I need to be putting more money into crypto right now. But I didn't because of my systems. My systems saved me. My discipline saved me. So my point is that no matter where you are today, no matter how much money you have to invest, you need to start today. You got to start building the habits and the systems. So my kids, they love to surf. So it's kind of like an analogy. So surfing is like super hard. It's probably the hardest sport in the world. So when they learn, we use beginner boards that are really big, and we surf on waves that are really small, right? But over time, their skills have gotten better. Both my girls are competitive surfers. I mean, you can see my daughter at the bottom. She's 8 years old, surfing over gnarly like coral reef on the islands, right? So as they've gotten better, their skills have progressed, and now they ride smaller boards. They ride more dangerous waves, right? And even though that looks way more risky, it's actually safe for them because they know what they're doing, because years and years and years they've practiced, right? And they've developed that discipline. And so if somebody says, hey, Mark, I want to learn how to surf. I've seen what you've done with your daughters. That's really good. Would you teach me how to surf? What's the best board that I should get? What kind of wave should I go to? I'm like, well, I don't know. It depends. Have you ever surfed before? How old are you? How much do you weigh? How tall are you? What kind of, right? There's no best, right? So it's just like investing. Investing is not one size fits all. So if you want to know what the best investment is for you, I don't know. It depends. And I'll show you what it depends on. Here we go. So it depends on many factors. The age. How old are you? It doesn't really matter how old you are. What's your time horizon? Do you want to retire in 5 years? Do you have 30 years? Your time horizon matters because if you make a mistake, do you have time to recover from that mistake? It's a big question. Now, luckily for me, I lost all my money. I was 30 years old. I had time to make that money back. But if I was 60 years old and that happened, it would have been a whole different situation. So because I was young and I knew how to make money, I could be more risky. It's not what I wanted. But that's one of the factors. So you need to ask yourself the age. What is my time horizon? My income, how much money do I make? If you make a lot of money, you can be a little bit more risky because if you lose it, you can make it back. If you're older and you're on a fixed income, you need to be really careful because if you lose it, you don't have time or the income to replace your money. So you need to be less risky, more conservative, right? Time horizon, investment size. How much money do you have? The more you have to invest differently. If you have smaller, you have to invest differently. What's your level of sophistication? The smarter and more in tune you are, you can use these more intricate strategies. But if you're not that sophisticated in the beginning, like my kids when they're learning how to surf, they use beginner boards on beginner waves. And so maybe you need to start with beginner investments. But over time, you can work up to more intricate or things, types of developments or investments.
Welcome to the Monarch wallet, a truly decentralized cryptocurrency wallet that supports over 3,000 cryptocurrencies. And for merchants, it includes Monarch Pay. Buy and sell from your bank or credit card. Earn up to 8.2% interest and soon get loans. A built-in decentralized ERC20 exchange. Portfolio tracker, market cap, and news. Users own their keys and seed. Biometric security. Go download the Monarch wallet today.
Your interests. Also, I like to invest along with my interests. There's some companies that are doing stuff that I really like, and so because I'm interested in what they're doing, I can dig in, I can follow them, and I can study, and I can keep up with them because I like it, I'm interested. And there's some companies that I could care less about those industries, or maybe I even hate those industries. And so I'm never going to put the time or attention to those industries. So what are my interests? I like to invest along with my interests. Risk tolerance. For me, I'll show you in a minute, I grew up racing dirt bikes, I still do. I've broken every bone in my body, I've metal in all 4 limbs, I've broken my back. So my risk tolerance is super high. But not everybody's risk tolerance is high. So what's your risk tolerance? So those are factors that you need to ask yourself. And once you've figured out where you are on that scale, and at the end I'll show you how to download a worksheet where you can figure this out and put some answers together. You got to figure out where you are on the scale. Are you aggressive or are you conservative? And that's individual. I can't tell you what you are. You need to figure out what you are. But the thing is wherever you are today is going to be different than where you are next year and the next year and the next year. So I don't want to give you a fish. I want to teach you to fish, right? So you got to learn to ask yourself these questions, and it changes over time. One size doesn't fit all, okay? So figure out where you are today by asking yourself those questions. Keep in touch with those questions so you can change it and develop it over time. That way you can build the system, which I'm going to show you in the next step, is where we take this, all right? So that's secret number 1. Secret number 2 is what you do is not the most important thing, and this is what I talked about before. What? Getting the one hot crypto, investing into real estate and the boom. The what isn't the most important thing, it's how you do it. So I love this quote from Tony Robbins, and actually I've had this in my deck for a while. My wife and my oldest daughter are in Miami at a Tony Robbins conference right now. Kind of funny. And she sent me an image, and he has some investing thing, and it was literally I'm like, wait a minute, that's my slide. It's kind of, and now I'm using his slide. But anyway, so Tony Robbins says that if you want to be successful, find someone else who's achieved the results you want, copy what they do, and you have the same results. Makes sense, right? Success leaves clues. I like to say that. So it makes sense, but notice he didn't say do the same things. He said to model the successful people. So it's not what they're doing, it's how they're doing it, okay? I need you to understand there's a difference with that. So if I think back in my own life, the things that I've been successful on, like I said, I grew up racing, I was racing motocross, but I didn't get to grow up racing motocross. I had to wait till I was 18. My parents wouldn't buy me a dirt bike. They said it was way too dangerous, and it was, because I broke all my bones, like I told you, right? So I had to wait till I was 18 until I could buy my own dirt bike, and I did. As soon as I turned 18, I made my money, I bought my own dirt bike, and I was on it. I've been waiting my whole life for this. And so I started going to these tracks with these big jumps, and I was riding as much as I could, the what, right? I was riding all the time, going to the track, the what. And then I started entering these races, and I got smoked. I wasn't any good. I mean, these kids have been racing their whole lives, and I just started, right? But I wanted to be good. I've waited my whole life, and I finally had the opportunity, and so I was doing the what. I was riding. That was the what. But I had to figure out the how. I knew I had my chance, and I wanted to take this chance, and so what I did was I said, okay, how can I achieve success really fast? Well, let me find some old pros. Let me find some guys at the track that are super fast and find out how they're doing it. The what was just going to the track and riding. The how was, what's their regimen? What are the techniques that they're doing? And when I figured that out, when I modeled the techniques and the regimens, the equipment, in a short period of time, I went from being a beginner to being really good. I ended up going to one of the largest races in the whole country, over 400 people, and had a top 10 ranking in a short period of time because I got the how, right? So I modeled the how. So that's the important thing. You model success, not what they're doing, but how they're doing it. And you can use these modeling techniques in almost any area of your life, whether it's health or relationships or money or whatever. Find other people that are successful, model what they're doing, and do the same thing. I started an internet business in 2001. Like I said, I didn't know anything about the internet back then. I didn't know anything about computers or programming, but I knew people were making money online. I found online companies that were doing really, really big things at the time. I looked at what they were doing, how they were doing it, I modeled it, and ended up building a company, selling millions of dollars, and selling off to a Fortune 500 company really quickly. Just because I just copied other people, right? I wasn't even inventing anything. So the same thing's true with you. You don't need to invent it from scratch. Just figure out a model that works for you. So real quick, in the crypto crash, right? People didn't understand how, and they lost their money. In the real estate crash in 2008, I lost my money because we missed the how. So what is that? That's what you're asking now, right? What's the how? Not the what, what's the how? Well, Ray Dalio, who's used to run one of the largest hedge funds in the world, Bridgewater Capital, he says that you should have a strategic asset allocation mix that assumes you don't know what the future is going to hold. That's the how. That's what the rich people know. They're smart enough to know that they don't know. They don't know what the future is going to hold. So I thought the crypto markets were going to keep going up. Every sign that I saw said it was going to keep going up. But I still acted as if I didn't know. And that was what made all the difference, right? So you need to have an asset mix, assuming you don't know. So basically be prepared for anything. Imagine like a professional ball game, say like basketball. So the basketball team has the ball and they're playing offense and they're about to score a goal, but the ball could be stripped real quick, so maybe they leave a guy back just in case to play defense, right? So they're playing offense, but they have people back ready for defense at the same time, right? So we need to be pushing forward for offense, but we need to be ready for defense at the same time. So that's kind of what that is. So on secret number 1, we talked about answering those questions, your age, your risk tolerance, your income level, sophistication. So now you should hopefully identify with where you are in the scale. That's the first part. Now the second part is, once you figure that out, you need to build this asset allocation mix like Ray Dalio said. And you use what you figured out in step 1. Are you aggressive? Are you moderate, et cetera? And you break down an asset allocation mix. And this doesn't have to get complicated. I'm going to show you it's super simple because there's only 2 levers that the government reports to us every single year. And if you figure out what those 2 levers are, you'll know which assets are going to go up and down. So there's only 4 areas we need to focus on. And so, for example, let's break it down. So real quick, so when I was first rebuilding back in 2009, I didn't have very much money, so I was super risky. So like 90% of my money went into like risky growth stuff. And only a little bit, like 5% went into some cash flow stuff. And then like 3% I held in cash and like 2% in insurance. I mean, I was like, I needed to build fast, but I wanted to start building those habits and discipline. So I started to build the system, the habits and discipline, even though I wasn't really getting anywhere. So that's kind of what that looked like. Over time, I started a business. I started making a lot of money again. Business was good. My investments were growing, but also my goals changed. I decided, you know what? I want to live off my cash flow. So cash flow became a big priority for me. So I switched my allocation. And so I went down to 70% growth, and I bumped my cash flow from a couple percent up to like 15% of my investments in cash. So my goals changed, I changed, right? And so my investments changed, my discipline, my habits changed. Fast forward to today, well now I've cleaned up in, I cleaned up in crypto, I started making a lot of money with my cash flow, and so now I only put 30% to growth. Now I want to be safer with my money. I was risky, I made a lot of money, now I want to be safer, 30% to growth. 40% of my portfolio is in cash flow. I keep 25% in cash because I think we're going to have a sale of a lifetime coming up, and I have like 5% in what I call insurance. But see, it changes. I change, my goals change, and so you guys need to be thinking along these lines. Systems, habits, discipline, I talk about that a lot. I mentioned a lot in this presentation. Every high performer across every discipline out there has had success because of their habits and their discipline, right? Every single athlete, every single top business performer, It's about making a plan, sticking to a plan. So real quickly, how this works is you figure out what asset allocation you want, and you stick to that. So for example, in January of 2017, I rebalanced my portfolio every year. I set parameters, so if it goes past a certain threshold, I'll rebalance the portfolio as well. So in the January of 2017, beginning of the year, I do it at the first of the year. Every year, it's like my ritual. So January of 2017, I had 30% of my portfolio in crypto. 30% of my money was in cryptocurrency. But by January of 2018, that was now like 80% of my portfolio, because in just 2017, they went up like crazy, right? So what did I do? I wanted to put more money into crypto, but I didn't because it was 80% of my portfolio. So I sold it down. I took profits to take the 80% back down to 30%. And where did I put it? I put it into cash. I put it into real estate, cash flow. I put it into gold. Well, I rebalanced it. Well, by January of 2019, if you guys know, 2018, the whole year went down. And by January 2019, now I wanted my crypto to be 30%, but now it was like 6 or 7% of my portfolio. Okay, well, I have this huge cash allocation and gold allocation, so I'll take some of that and I'll buy back into crypto to bring it back up to 30%. So I sold at the top of the market in January of 2018, and I bought at the bottom of the market in January 2019. I'm up over 300% on my crypto allocation just this year alone. Not because I have a crystal ball, not because I'm telling you I'm the smartest guy out there and I can predict where the markets are going, because I got a system. That's it, a system. That's what saved me. I'm not telling you I can predict the markets. I'm not that smart, right? That's what saved me. So it's not the what, but the how. Does that make sense? You guys still with me? You guys want to have a system and a habit to make money? Because you're going to get one more chance. Now you're probably asking yourself, what goes into the different allocations? That's great. Okay, so we talked a lot about crypto, which cryptos. What about these other things? You're talking about cash flow. How do I get cash flow? What's this KS hedge insurance? So what do we buy? How do we know? All right, so secret number 2, the 2 levers that move asset prices. So the concept that changed everything for me, like I said, was this, that money transfers like energy, and I wanted to be on the other end of it. So I learned that there's 2 indicators. There's inflation and economic growth. All right? Inflation and economic growth, that's what moves asset prices, and there's 4 different so we want to look at, is inflation growing or is it slowing, and is economic growth growing or slowing? The government reports those numbers for us. They tell us what the inflation is, and they tell us what the economic growth is. Those are the 2 indicators they use, right? And so as long as we can understand what those 2 numbers are and what they do, we can put that into place. So let's say after the 2008 crash, what did the government do? They started printing money. At first, it was supposed to be 800 billion, then it became trillions. And they started pumping in money, right? They expanded the money supply faster than any time in history. That's called inflation. Okay, well, which assets go up with inflation? Well, gold goes up with inflation. Shoot, well, let's buy gold then, right? The government tells us they're printing money. We know that's causing inflation. We find an asset that goes up with inflation, and we bought it. We're up a couple 100% on gold. Great. The government told us what they were doing, right? So you just have to understand how to read the signs. So what I did is I took time and I mapped out the different types of assets. All right, so when we have inflation rising or falling, or economic growth rising or falling, the 2 hidden forces, these are the 2 levers that move all asset prices, and there's 4 different types of asset categories. So if you have economic growth rising and inflation is rising, well, like gold, real estate, things like that, we're going to do really, really well. If it's falling, well, then maybe you want to go to cash in a deflationary environment, right? So you map out these different types of assets. So what assets are we going to buy? I'm not going to leave you guys empty-handed. I'll tell you some, okay? First of all, we're at a crypto conference, so buy crypto. Now I'm here, I was going to talk about more fundamental stuff about Bitcoin, but like I said, you guys were hyped up enough about that already. I can tell you that I am probably one of the biggest Bitcoin bulls that walks around, not just here, but pretty much anywhere. It's all I pretty much speak about. I believe with everything I have that Bitcoin is the single best opportunity that we'll ever have in our lifetime to build wealth, and every single person here should own it. But that doesn't mean you put all your money into it, all right? That doesn't mean you put all your money into it. There was a show, it was on CNBC, Anthony Pompliano was on there with Mr. Wonderful, Kevin O'Leary, and they were debating Bitcoin, and Mr. Wonderful from Shark Tank says, well, if you're so bullish, Pomp, how much money do you have in crypto or in Bitcoin? And he says, I have 50% of my net worth in Bitcoin. Mr. Wonderful says, what? That's the stupidest thing I've ever heard. I teach about this stuff, never have that much. So that 50% is a lot. But even if you did have 50%, that's still only 50%. Where does the other 50% go? That's the whole point of what we're talking about here, all right? So what assets do you buy? So complexity is the enemy of success. Keep it simple, stupid, KISS. I like to say that. So there's 4 areas I look at. I think about like growth. What types of assets can I buy that will grow, like cryptocurrencies? But also, what kind of assets can I buy that can provide income for me, cash flow? What kind of assets can I buy, or like what are my cash allocations? Always have cash. And then insurance, like what kind of stuff, how do I insure against losing all my money over here? So that's the 4 areas that we look at. So growth, obviously cryptocurrencies. Bitcoin's up 150% year to date, Ethereum's up 75% year to date. I have about 5 or 6 other small cap cryptos that are up a couple 100% this year. But you could also buy stocks and equities, right? So you could buy the whole stock market in one ETF. If you don't know, if you're like Kiana, she can teach you how to buy stocks. But if you just want to buy the whole stock market, like right now the Fed is printing more money than has ever been seen before. I mean, trillions of dollars. And where is that money going? It's going to prop up the stock market. Do you think the stock market's going to go up? You could buy the whole stock market in one ETF. Right? So there's some ways to do that. So obviously cryptocurrency, stock market, technology stocks, cannabis, so there's another area that's probably growing really fast. Income. So yesterday, Nick from Divi talked about staking cryptos and making income off of staking and doing masternodes with crypto. So you can do income off of cryptocurrencies. You can also do crypto lending like Alex Mashinsky from Celsius was up here talking about. So you can make income. So I'm holding Bitcoin and I can give it to him and make 4, 5, 6% on that. So I can have income coming from my Bitcoin holdings. Also, real quickly, we got the real estate master sitting right down here, but there's easy ways to do that. You could do crowdfunding or crowdsourced real estate where I could buy into Yield Street or Crowd Street and make 8 to 10% returns on real estate really easy. So there's ways to do that. You can buy ETFs, you can buy dividend-paying stocks. There's a lot of ways to do income. And again, a lot of this depends on your sophistication. How much time do you have? So if you're not that sophisticated and you don't have a lot of time, just pick something really easy. If you have more time, then you can get Kiana's stock trading course and figure out how to do stocks individually, right? So, but think about it in those terms. And then cash. Always have cash. Always have cash. Make sure you have an emergency fund. I'd like to say at least 3 months of living expenses at a minimum that should be saved away, and that's not money to be invested. That's just emergency funds. They say, I think like half the population couldn't even afford a $400 expense today, an emergency, and that's pretty sad to hear. So have your cash emergency fund, but also keep cash, because like Keanu showed the picture of the bikini and it was 50% off on sale, so when assets go on sale, we want to make sure we can take advantage of that. Warren Buffett's partner said that the big money isn't made in the buying and selling. The big money's made in the waiting. It's not the buying and selling, it's the waiting. So you need to be ready to take advantage of that. And I believe the sale of a lifetime is coming. We have kind of we're in the longest bull run in history. Markets go out with a bang, they don't go out with a whimper. What that means is we have this melt up, this blow off top that's about to happen, and we're about to see the markets go up so fast it could melt faces. But what comes after that is the market crashes and everything goes on sale. So we need to be ready for both. We want to take advantage of the upside, be prepared for the downside, and cash is a great way to do that. One thing I like is like stable coin lending. So you could take your cash, if you have cash in the bank, and like Alex said, who can make 2% on your cash in the bank? You could do like HSBC or PNC, they do like high yield accounts where you can get 2% on your cash. It's not that good, but it's 2%. But you could take that cash and turn it into a stable coin. So it's guaranteed to keep up with the US dollar, and then take that stable coin and put it onto Celsius and earn 10% on your cash. Pretty amazing. It's about better than you can get on most investments. 10% on cash. So keep cash, but make money with it. Typically holding cash is a horrible idea because of inflation, it's losing value. But if I can earn 10% on cash, it's pretty good. And then last but not least, a chaos hedge insurance. Again, we're at a crypto conference, but gold and crypto are fighting the same war. We're both fighting against inflation. We're both fighting against the government runaway spending, et cetera. So think about gold and cryptocurrencies like Bitcoin. They're the same thing. Now, just one more time, 2 things that move the markets: economic growth and inflation. 4 different types of assets that move based off of those. And that's it, keeping it simple. Those are the 2 levers that move asset prices. So what we went over, to recap, 3 secrets. 1, one size doesn't fit all. No matter who you are, what age you are, where you live, how much income you have, what your risk tolerance is, there's a specific plan that works just for you. And you need to answer those questions for yourself. What's your age, risk tolerance, all those things. Figure out what the plan is. And also, don't wait until someday, maybe one day I'll be that guy. Start today. Start building those habits and start building that discipline. So when that next bull run comes, you've already got the systems and habits in place like I did, okay? Secret number 2, it's not what you do. Just investing into crypto right now is not going to be enough. You have to get the how part right. So set up the system so when crypto goes up, I automatically take profits. And I put those profits over here. That's the how. And the 2 levers, now you know. Watch the government. When they say inflation's going up, when they say economic growth is going up, when they're printing more money, understand what assets are going to go up. All right, now, maybe you feel like this. There's a lot of information, I know, and I went through it really quick. If you want, go to this link right here, and you can download this. I'll send you this entire PowerPoint slide. And I also put together a 20-page report that's free. Just download it, and it basically walks you through all those questions so you can identify what type of investor you are. I give you 4 different types of asset allocation, so you can say, well, I identify as a conservative. Well, there's an asset allocation that I can model. Or I think I'm more aggressive. Well, I can model this one over here. It's also going to go into depth into these 4 different asset classes. You get it just for free, just for attending. It's my free gift to you. So go to that link, download the report. I'll send you the PowerPoint. And then, if you want, you can check me out on YouTube. Mark Moss. And that's it. That's what I got. Oh, look at that. 45 minutes exactly. Thank you. Thank you.